So thank you very much for attending the Monday Market webinar. Trust you've all read the risk warning at this stage. It is the weekly market analysis webinar. Just to quickly explain, going to run through the major markets that are covered at LCG. It's primarily technical analysis. If you do have some questions about the news or anything else, specific chart patterns or other market you would like me to cover, please just let me know. Shoot a question over, and I'll answer as soon as I see the question. So without further ado, let's have a look at the charting platform. Traditional formats start with currencies, work through indices and then commodities. But as I said, feel free to let me know if there is some other market you're looking at. So first off, looking at the euro here, we've had a bit of a rebound. We're still stuck in this broader trading range. Had a bit of a rebound just because the dollar's been selling off a bit recently, not just against the euro, but against the yen and the pound as well. And indeed, against some of the emerging market currencies has been a bit of a change up. What we've seen over the last few months is that the dollar has been going largely sideways to slightly lower against the major currencies, the European and the British and more developed currencies, but it's been trending strongly against the emerging market currencies. But we've seen a bit of a change in that really since last week's sell-off. The dollar's been looking a little bit weak, and obviously we had the that slightly softer non-farm payrolls result as well, which I think is somewhat adding to it. So this is the euro. So we're basically, it's 115.10 is the lows here. We did manage to get down to around 114, where the lows that we recently reached last week, and then subsequently about 114.50, you could say, and we've obviously rebounded from there. This is not a trending environment, so I wouldn't look for any trend-based strategies. You can say in the short term, looking at the 4-hour chart, we've got a bit of an uptrend going on. You can see we had that prolific sell-off from the top of the range down to the bottom of the range was here. We rebounded, went a bit lower, basically a false break lower for the time being, and we've pushed back into the range again. And basically you can sort of see that a minor uptrend in place. We basically had these highs here, pushed up, broke through them, come back, retested, and so it's looking like we're eyeing up higher prices for the time being in the euro. So obviously just approaching that resistance area, but for the moment it looks like higher highs and higher lows in place. But again, in terms of determining some longer term direction, I don't think we quite have the determinant yet. I wouldn't categorize this as a particularly meaningful break lower, so I'm not looking at this rebound necessarily as an opportunity to sell into the weakness. This obviously was quite a stark sell-off, but we haven't really made progress even through these lows. It was pretty choppy, and we haven't even got anywhere close to the 113 lows. So we are below those daily moving averages, but like I said, there looks like there's a bit of a kind of short-term uptrend in place. So difficult, I would say. Range-bound strategies probably the best one to play here, which is not something I typically involve with. I like to see a trend in place. So not my favorite market at the moment, the euro. Pound, so similar in that we basically rebounded off the lows and haven't, we've had a few conflicting weekly candlesticks, which I think best represent the uncertainty here. Couple of weeks where Brexit was looking like it was never going to happen, had a little rebound where actually language was good, sold off at the end of last week. Theresa May rejected the EU proposal, but as I said, a bit of dollar weakness coming through today, and we're getting a little rebound again in the pound. So rejections from the lows and the highs. We basically have this trading range in place, which isn't really helping us determine the trend one way or the other. So we're looking for a more determined breakout. We're not quite getting it at the moment. So I'd be inclined in the short term, at least, where I've already seen a bit of a reversal from the highs here, another rally up to these highs here. I'd be inclined to to look for short-term sells again at the top of the range because there's no particular obvious trend in place. These weekly candlesticks are just going from bullish to bearish. So once we get a break out of this range, I think you can start taking a bit more direction. But I think from the get-go, I've been cautious about. I mentioned these two bearish candlesticks. What I would have expected, or what at least would have made sense for me, is for a drop back down towards the lows, and then potentially a bottom in place for a greater rebound. But we haven't quite had this action yet. We've been chopping around in this zone, so looking for at least a breakdown to retest the lows for a double bottom, or at least for this correction to surge out of the box and at least get a bit more legs out of it. But we're not getting, so we need one of those really. The dollar weakness at the beginning of the week perhaps pointing to an upside break, but again, not quite there, not quite the trend in place yet. Something that's moving a bit more decidedly is dollar yen. So basically, you remember that we mentioned a couple of weeks ago now that 114.5 was a big period of overhead resistance, and so we pulled back from there for the last, well, including the beginning of this week, 3 weeks. But now we're approaching down towards the 111.40, which potentially for me, I had previously highlighted 112. We basically put in a few little weak candlesticks there, but if I zoom in a bit, you can sort of see that we stuttered around 112 and the 50-day moving average, so that was a little confluence of support there, but we weren't able to rally off the blocks. Again, the dollar looking a bit soft here, and it's dropped through these lows. So this to me looks bearish. Just the fact that we theoretically should have been able to rebound off 112 and the 50-day moving average. So unless this whole day's action is just one massive false break lower, which is possible, at the moment it looks a bit soft. If we close today bearish, I think we can get more bearish action down towards the 110.50, down towards retesting this broken long-term trend line and this low down here. If this is just a big false break through these lows, so these were looking quite bearish, we got our confluence of support, but there was just, maybe big players in the market trying to grab a bunch of stop losses under these lows before the market springs higher. That would be a very bullish development. So we've got to look. Today's candle actually could be quite informative either way. So potentially I'd look for, if there's a reversal off the lows, I'd look for this to be the end of the pullback and a rally up towards 113. But if we get a soft close here, closing near these last 2 daily candlesticks, we're looking for some follow through down to 110.50-ish or so. Okay, switching through to indices. Obviously, this is where the action's been. Footsee slightly outperforming today because we've had a bit of pound strength and some slightly more positive, no positive Brexit news, obviously, but the resulting sterling weakness has been good, and also oil prices heading higher. That's been good for those energy firms on the Footsee, but obviously looking very soft in general after that big sell-off last week and the week before. So short term, obviously just a big bearish trend, but we're wondering where this correction ends. It does very much look like the Footsie's just broken its bullish channel, stalled twice at around the kind of 700-800 level, basically put in a double top, broken the trend line. Obviously there's some big bearish action here. That's bearish in itself, broken the rising trend line that has 3 nice touches on it. What you'd look for is some sort of rebound to retest this trend line in some sense before rolling over again. And then obviously the next proof of the pudding, if you like, for it being a very soft market is taking out this February low. So that's nature of the beast in the Footsee. We did say in our quarterly outlook that we're expecting a bigger pullback in the Footsee. We haven't quite got to those target levels, which are a bit lower down. So, potentially some more weakness to come. Momentum all looks very weak, not even oversold yet. So, again, looking for a bit more weakness, but maybe short-term strength to sell into would be ideal. Where could we get to there? Well, ideally it would be the previous low, but I think typically what you get when you see markets falling off a cliff like this is it's quite unusual for the price to be able to rally even to the previous low, let alone the previous high. That would be quite a strong rally to get up there. And if we did get back up there, I'd be more inclined to think that we carry on to record highs. So more likely, any rally we get would peter out before we even get to that that previous little swing low there, which comes in around 7230. So looking for the bearish daily candlesticks to come in and show a continuation as weakness before we get to 7230. Potentially the broken rising trend line, as I mentioned. DAX, probably the most interesting setup, just seems too good to be true. Seems like just a very good likelihood of a false break lower here, but nonetheless, it's a fairly classic looking head and shoulders pattern here, which will be obvious to anyone looking at this chart, which is kind of what worries me, because if it's this obvious, then oftentimes it doesn't work. You want the pattern to look a little bit more convoluted and not necessarily what everyone's thinking about. But here, left shoulder, head, right shoulder, and we've closed down below the neckline, characterized by these three lows here. So simple enough, we're just projecting the height of the pattern down here through the breakout level, which quite nicely takes us down to this sharp reversal low down here, which is well below the 10,000 mark. But if you're being more conservative, if this sell-off's got legs, you'd probably be targeting somewhere around the 10,000 area. It's obviously a round number that big investors would target. So again, all quite bearish. You can actually see on the daily chart, we've already come back to that, that low here, failed at it a couple of times. But the worrying thing is we've seen similar things off the lows. So I suspect we probably do rally out back through this neckline, because as I said, it's just almost too obvious to sell with sell stops below this neckline. Maybe we get bears a bit worried, rally up towards these moving averages again for another sell signal. That would be good. We'd obviously have higher prices to be able to sell at. So if you're being more aggressive, you have had reversals, you've had the break lower, you've had the resets. So potentially we just head lower straight from here, but it doesn't look like it based on the fact that we're kind of ending off the lows down here. So I'm expecting slightly higher prices, potentially targeting this low here, or if we're just targeting this kind of sell-off in general over the past few days, we could look for a Fibonacci retracement. The 50% pullback, always quite classic. So either just the rally itself, or if we just look at the worst weekly candlesticks, we could even go by this single week sell-off. Be one thing to do. We can see the 50% level comes not too much above this trend line, and the 61.8 comes just beneath that low there. So we probably want the reversal to take place in this area. If we get up through here, the market's looking quite strong. Maybe everyone's buying the dip. Wall Street, so this is the weekly candlestick chart. We've obviously put in what could be a major topping pattern, but for the moment we've bounced off the 50-week moving average, and I think that comes in pretty close to the 200-day moving average as well. It's not something I typically have on my chart, but I've heard a few people reference it. So we've basically put in a little base for now, but I think it's going to be a while for the market to regain its confidence. Obviously, this is what we can look at as a similar scenario. This is the February sell-off. We got the sharp rebound, but it really took a long time. We did essentially retest the lows a few times before the market regained its confidence for this rally. And the fact that we haven't really been able to materially take out those highs, and we've had another sharp sell-off, to me looks pretty worrisome. So hopefully people look at this as a dip buying opportunity to send the price higher, to then present another opportunity to sell it down. At the moment, we've got an inside day pattern here. So watch out for breakouts either side of this last week, the last day from Friday. Obviously you get false breaks, but it could provide some momentum one way or the other past Friday's high and low, because that's an inside day, or harami if you're dealing in candlesticks. Gold looking very good. So, you know, basically what we would want to see right now. So last week we finally got the breakout of this consolidation we've been talking about for the past few weeks. You know, obviously I referenced that bullish engulfing pattern. We came back down, tested the lows after it. We had the little inside day patterns, and then we had the big breakout, and we've had one little inside day harami with a breakout today. So even after today's close, still looking bullish on this market, and the moving average are just shifting in your favor. To me, it doesn't look entirely, I can't see a particular reason why sellers would be looking to come in en masse on this. There's no obvious kind of sell point. Maybe this peak over here, which is what I had originally looked at, was around 1235, I believe. That's where we're approaching at the moment. It's those two peaks there. So on that longer term basis, maybe we fizzle out there for a little bit of a pullback for another buy, but overall, I think the gold's shown its hand. And we did ask, you know, for a while, we asked the question, was this monthly rising trend line going to hold? You know, we had that little false break through it and it was looking positive, but we stayed soft for a few weeks. But now I think we've made our move, and you know, I think this is gold recovering from here. So I would for my instinct here, based on everything I'm seeing here, is to go with this breakout, probably not try and sell it down at the 1235 level, but obviously it's a yin and yang. If gold is to rally from here, that means we'd probably need more equity weakness as well. And obviously if gold is to rally from here, we'd need more dollar weakness as well. So all these markets kind of correlated, as investors are kind of de-risking. Switching gears to Brent, getting a little bit of a rally off the gates, but coming off those highs today. The political pressure being added to Saudi Arabia, which is obviously the main producer within OPEC. You know, potentially some, you know, if this thing with the journalist in Turkey really unravels and really escalates, you could be looking at sanctions in Saudi Arabia, which would be quite a crazy situation and would have a material impact, you'd imagine, on global oil supplies. So not particularly, it's not a likely scenario. One telltale sign is that a US ambassador is still going to a conference that's in Saudi Arabia, whereas a few companies and individuals have backed out while this investigation is going on. It looks like the US politically still showing some overall support for Saudi Arabia, despite some tweets from Donald Trump to the counter to that. What's the meaning of all that? Well, we had a bit of a sell-off in oil prices. Oil sold off as risk assets sold off, but overall still in the bull market. So we've had a bit of a pullback here. We've pulled back to the top of the old range, but so far, you know, nothing to really imply to us that we shouldn't still be bullish. So we're looking for, basically, we've closed above those old highs. The old resistance so far is holding as support, so we're going to assume it continues to do so and look for the price to rebound from here. I don't normally mention it, but silver also obviously having a bit of a rebound like gold, and something of an inverse head and shoulders pattern potentially setting up here. Left shoulder, right shoulder, neckline. So we haven't got to the neckline yet, but potentially silver looking to rally out the blocks. And we do want to, if we see silver doing well, it may do better than gold, but actually gold typically does well it's typically a bull market for gold and silver, when silver's performing the best out of gold and silver. And for a long time, gold has been outperforming, and it's been accompanied by falling prices for both. Right, I'm going to leave it there. Thank you very much for attending, everyone. Good luck with trading for the rest of the week. It's Jasper signing out.